Hello and welcome to another episode of PropSutra. Welcome to the show, sir.
Thank you for having me over.
So we'll jump right in. My first question to you is, what according to you are some of the reasons why somebody would prefer to rent rather than buy in a city?
When you think of renting or buying and when you all talk about real estate, please understand real estate has two colors. One is when you want to use it as a utility, as a shelter. You need place, so you need to have a place. And the other is when you bring an investment element onto it. It's almost akin to jewelry. If I buy a gold biscuit, then I'm using it as an investment. I'm keeping it in the safe.
Right.
But if you buy jewelry, you're wearing it because you want to show people that you like this piece of jewelry and you can afford it.
Right.
Correct? So similarly in real estate, when you talk about rent and why do people rent or when do we need to buy, it's purely a question of any other decision you have. If it comes to seeing as a durable or a utility, any other question you have, can I afford to buy it? Right. Or do I rent it? Like today, even a furniture today, you can rent.
Yes.
You don't need to buy the furniture, correct? So, do you rent a furniture or do you buy the furniture? If you have the money, you'll buy it.
Right.
If you don't have the money, you won't buy it. That's one. Okay? Then the question comes in is, even if you have the money, should you buy it?
Right.
Where most people do not understand is the emotional aspect of home ownership. The generations of X, Y, Z, what we call after the baby boomers, who have seen maybe far more comfortable economic situation than the earlier predecessors did, they believe that they should pay for the usage anything.
Right.
So today the question comes, why only housing? Think about car. Should you buy a car or should I just Uber every day?
Right.
So the new generations believe, why should I have a car? Whenever I want, I'll jump into an auto or a car, or I can Ola it, I can Uber it, I can do anything I want.
Right.
So I don't need to buy the car. So if your mindset is like that, look, I don't want to sink any roots. I don't need any status symbol. I just want to use it and pay for it. Then most probably you'll rent a house.
Right. I'd like to talk to you just about real estate as an investment. I have the money. I want to sink my roots. I have a fair idea of where I want to live, what my financial limitations are. How do I go about it?
Good question. See, when you come to real estate investment, the first thing I would advise all my listeners and viewers to remember is, do not look for market timing. You know, many people think they should time the market like in a stock market. Even in a stock market, you should not time the market because nobody is an expert. If you can really time the market, you'll be a billionaire overnight.
Yes.
Correct? So even in real estate, you can't time the market. Any investment, and the larger the investment, the first lesson you all remember is you need to be more patient.
Okay.
You know, because it is a ticket size.
Right.
You understand? So that means if I'm making an investment of 10 lakhs, I'll have to be patient for maybe 3 years. If I'm making an investment of 1 crore, you better be patient for 10, 12 years. So as soon as that long-term duration starts, you will realize that you can't time the market. So the first lesson I'll tell you all, don't time the market. Don't tell me, is it a good time to invest? And if I invest where it is, you can do research. There's no doubt. But don't time it always. Okay? So when you don't time the market and you decide it is an investment, the second thing is, what are the returns I'll get out of it? Real estate is a low-risk, low-return product. It's like a fixed deposit. You cannot compete with stock markets.
Right.
You understand? Why is it a low-risk product? Because it's physical. Sometimes when you buy real estate, even if it is under construction, you have a lot of protection today under RERA that you will get your product. It is physical. It is not a paper asset. It is not a digital asset like crypto.
Right.
So you can see it, feel it.
Right.
And most importantly, you can use it if you want. Whether it's a second home or your own house or even in a house in your hometown.
Right.
You can use it. So it is a low risk asset. Okay. The third important aspect about real estate is an appreciating asset. A car is a depreciating asset.
Right.
But real estate like jewelry or gold is an appreciating asset. It appreciates over time.
Right.
So by buying it, there is a appreciation rate which can differ from era to era, but it will always appreciate.
Understood.
Because land they don't make anymore, as Mark Twain said. So it will always appreciate.
Right.
You understand? So if you forget about, what returns will I get? Is it 9% or is it going to be 12.5? Nobody can give you an answer.
Understood.
It is a low risk, low return product. When you say a low risk, low return product, it will be inflation hedged. That means it will be more than the inflation rate. It will give you a marginal return higher than the inflation rate, and it will be comparable to any other safe product. So when somebody is wanting to make an investment, the first thing that comes to them is what is at my disposal and how do I allocate it?
Right.
You understand? And that comes what we call the risk profiling.
Right.
The risk profiling is based on your age. Okay? Generally, as a rule of the thumb, we say 100 minus your age, you can put in stocks.
Okay.
So if you're 20 years or 30 years, you can put almost 70 to 80% in stocks because you can play a higher risk game because you're young. You can recoup.
Right.
Even if you've suffered losses. You can take the risk. But if I'm 60 years, I will put only 40% in stocks.
Understood.
And the rest will be in much safer assets. You understand? Okay. So you will do an allocation of your surplus and then decide what can I put towards the low risk asset.
Right.
As an investment.
Understood.
Okay.
Yeah.
So on that basis, one can easily do it to say that this is what I can allocate towards my investment. This is what I can leverage if I want to by taking a housing loan because it'll give you tax benefits also.
Right.
And where I can afford it or where I can buy it will depend a lot on your own personality, on psyche. Whether you want to go back to your hometown, whether you will say, no, Thana is a very vibrant rental market, so I'll be in Thana. Or you will say, no, to hell with it. I want to be in it first. I'm sick of being in rented houses.
Right.
So even if I sacrifice on the space, I'd rather take a small 1 BHK,
Understood.
bang in Malad or Goregaon or Kandivali or anywhere I want to be.
Correct. But I'll ask you this. I have, say, 50 lakhs. What are the advantages of buying an actual property vis-a-vis maybe putting that 50 lakhs into real estate, but in a different form, whether it's a REIT, whether it's an AIF, whether it's into a fractional ownership opportunity?
See, when you go into a REIT, AIF, fractional ownership, you have to see it becomes a little bit more complicated. You're now one step or two steps away from the actual ownership of a physical asset. Okay?
Yeah.
Because you're holding a paper asset which gives you an ownership of a property which is not under your control, which somebody professionally is managing it.
Right.
Okay? Why you do it is because it gives you a better sort of a avenue for investment. Like, for example, you in your wisdom think, I don't want to invest in a residential property. I want to invest in an office property.
Correct. Yeah.
Now, you can't go with your 50 lakhs and buy an office property.
No, I can't. Yes.
Okay. So you go and buy a REIT worth 50 lakhs because they will collect people like you. And for 50 crores, he will buy a office property in BKC.
Right.
And you will be riding that appreciation in BKC.
Yes.
It's your research which tells you whether it's an asset class or geographical location where you can buy it. So paper assets sometimes help you to break through that barrier. I'm very bullish on BKC, suppose. How do I buy into BKC with my small amount?
Right.
So I can buy it through a REIT, or I can buy it through a fund. I can buy it through fractional ownership. That is where it will help us.
Right.
But I'm not saying it's a bad investment. Of course, it's a good investment. It's based on the research you do, because as soon as you say you want to invest, you would be putting in research.
Right.
When we don't want to put in research, you go to a fund manager because he's doing the research for you and he's charging you a fee for that.
Should somebody restrict themselves to just one asset class? No, you touched upon it, but I mean, should we
No, it
change our
depends
mindset?
upon what your research feels and what your amount is. See, if you have 5,000 rupees, you're not going to buy 10 stocks. No? You might buy one stock.
Yes.
If I have 5 lakhs, I might decide to buy 5 stocks. If I have 50 lakhs, he'll decide to buy a portfolio of 20 stocks.
Right.
So it depends upon your quantum also. When you go into multi-asset class, multi-location, as to how much money you have.
All right. How much money should one put in as equity and raise as debt? So if I'm buying a house, I'm buying a property, should I fund it 50% myself? Should I raise the other 50%? What's a good balance?
Well, that's a very tricky question because it will depend upon your risk profile and your debt appetite.
Assuming
Many
I'm
people,
debt
suppose,
averse.
are absolutely debt averse. You won't take any debt, no? Irrespective of any tax break. You'll say, I don't want any pressure of EMI on my head. Suppose you're not so debt averse, you'll say, I'll take 50-50. I'm comfortable in the worst situation, I can sell it. I'm not going to be out of pocket, what we call. Because that property, when sold, can service the loan along with any outstanding interest you have, and it'll still leave a little bit of equity for you.
Right.
If somebody is very high risk taking, like when you're young, they will max it out. You will just put in 20% down payment and take 80% loan. Because you're riding the wave of tax breaks. Sometimes there's what we call a positive arbitrage. That means you're taking a loan at 8.5%, but you believe your return will be more than 8.5. So every year you're gaining on someone's behalf.
Right.
Because you're borrowing at 8.5, gaining 10%, so that 1.5% is yours.
What you're making.
So if you're believing that your appreciation on that property over time is going to be higher than the interest rate, it's a positive arbitrage. So you will try that stunt.
I have a pool of, say, about 45 lakhs. I'm a working professional in Mumbai. I wish to be here for the long term, at least. But I can't afford to buy a house where I'm currently working.
Correct.
And nor do I want to move. I still want to live, say, I work in Santa Cruz. I wish to continue living in Santa Cruz, but I do want to buy a house. So should I consider buying it on the outskirts of Mumbai? Or should I consider investing perhaps in my hometown in Hyderabad or in a Chennai? What do you recommend?
See, there are 2-3 ways of looking at it. Okay. First, if you've made up your mind that, look, I want to be in Mumbai or Greater Mumbai, then you will not think of Hyderabad.
Right.
You will figure out whether your money, what can it buy in that Greater Mumbai area.
Right.
Okay? It might not be your area of choice,
Yes.
but you'll slowly keep coming towards your area of choice as your savings increase over time. And you can leverage more and more also because of a rising income.
Right.
So you will slowly move towards that way. But that is, as I said, is a part of your personality to say, I want to have a house.
Right. No, this is
You
assuming
understand?
I want to. Yeah.
Because suppose somebody says, I don't want to have a house right now, but I want to buy a house by 40. Then he will put the same money in some other investment and wait till it to grow. That is what all these SIPs they tell you to do. No?
Right.
For a child's education, for a house, for a holiday, you keep making SIPs so that it grows over time. And at 40, he will liquidate that and then see where he can buy. So it is a switch in your head as to whether you need a house, you want to own something which is yours.
Right.
Many people like to own a piece of land, for example.
Yes.
And that's why there's some developers who are selling you plots of land.
Right.
In the South, in fact, most people prefer to buy plots of land rather than an apartment. So that is more of a psychological need that I need something. This is mine.
Right.
You understand? So a good strategy would be, if you know your area or the city at least, you will buy in wherever you can afford. And then slowly over time come towards your area of choice as your savings grow, and you can leverage also a higher debt amount.
Okay. All right. So in MMR, should I be looking at areas, say, that are up and coming near the new international airport? Should I be considering infrastructure projects? Is that how I should go about it? Or should I
That's
look at it?
research. See, research talks about how you will look at infrastructure. You need physical infrastructure. You need economic infrastructure. That means you need to be where you have a lot of offices or industrial activity. And finally, you'll need social infrastructure. So when you do research, we'll try and intersect all the three.
All right.
You understand? So usually in any developed country, physical infrastructure, basic infrastructure starts, then economic infrastructure comes, and finally social structure comes.
Understood.
Okay. In India, however, because we are a developing nation and we are always strapped for resources, it doesn't go that way all the time.
Understood.
You understand? So generally, economic infrastructure starts, and then people rush in because they want to be close. Then basic infrastructure is pushed, and finally social infrastructure sits. But whichever way, it will be the intersection of these three infrastructures.
So it's based on how well I research a
Correct.
place.
So you are going towards the Navi Mumbai airport saying already there is a basic infrastructure.
Correct.
There will be economic infrastructure because there's a new international airport coming.
Yes.
Social structure will follow, so I will bet on it.
All right. Okay. My last question would be, say I'm Bohemian. I don't wish to sink my roots in any way, anywhere. I still would like to play the real estate game. I want some amount of my money invested in real estate. But I'm fairly comfortable living on rent my entire life. If so, how should I go about it?
That is linked to your previous question which you asked me, and I'm very clear. So those sort of people, you should go into real estate proxy assets like REITs, funds, because they'll be more liquid, and he will have a wider choice immediately. You understand? So he can bet on a real estate listed stock. He can bet on a REIT. He can bet on a fund with a specific theme. It's a warehousing fund or an office fund or a retail fund. So he should look in those aspects rather than a physical asset. A physical asset investment is generally, I would recommend for people who want to play really safe, low risk, and have that feeling that they should own something. It satisfies that urge more. If I'm just a pure investor, as you said, Bohemian in spirit and no roots anywhere, I would prefer to look at these sort of paper assets and proxy assets of real estate rather than real assets of real estate.
That's a wrap for today. Thank you so much for tuning in. Please don't forget to like, share and subscribe, and hit the bell icon for notifications.